like Bulgaria, except English speaking. It was very hot, Ivan. What about you? It's hot. San Diego, we got a heat wave.
Yeah, definitely, you can say so, but it's humid. That's the issue. But
were you topless on the beach again?
Topless? Yeah, I'm always topless on the beach.
Okay. All right, let's get right to it. It is August 13th. We are on Momentum Monday, and it's me and the Ivan going through charts. It was a quiet week. I enjoyed kind of a quiet week. I'm sure there's some new ideas that we could share, and let's get right to the action. The charts and data brought to you by MarketSmith.investors.com, which we appreciate as always. This is the S&P. Ivan, I think everybody can just see the charts, correct?
Yeah.
All right. So this is the S&P. Quiet week. A little bit of a weakness at the tail end of the week. I have no idea how to read into it. I think we got to go to the market of stocks. We're in a market of stocks. There's just strong rotation. So let's get right to some leaders. Apple.
Yeah, I mean, it was a quiet week, but in the indices, but not in individual stocks.
Yeah, there's a ton of ideas. I think Apple today closed all-time highs.
Yeah, I mean, definitely they reached new all-time price today, but they pulled back along with many other momentum names as the weakness in emerging markets started to scare people off of other sectors as well.
Yeah, I just think Apple's strong. Like it's a tell right now. Where's Google at? Yeah, I mean Google's just kind of hanging out above the gap. It's summer. I mean, it's going to take some major news to get people off the beach and into the office right now. Let's look at one stock hitting new highs. One of the leaders, Spotify. SPOT.
Yeah.
Pretty much all-time highs today. The subscription businesses have been on fire, Netflix actually consolidating. But subscription business on the software side have been continuing to bounce back. Mongo on the enterprise side, MDB. Last week it was Twilio. Some reversals, but a lot of the same leaders. I want to talk a lot today about biotech and some new names and housing. This is Twilio, kind of broke out and it's just not no continuation pattern. So you can just see Ivan's flipping through some. What's SailPoint? This is one that we've talked about.
It's a cybersecurity name, also software as a service stock. Broke out last week to new all-time highs, but as you can see, the general weakness and the scare from emerging markets is keeping many breakouts at bay the past few days.
Yeah, but you can see there's just marking time here. Yeah, that's an interesting one. SailPoint. So it's been public, 6-7 months, so the insiders have had their chance to get out. Yeah, interesting leader.
Very interesting to see that sell-off in cryptocurrencies, and then we see it in some of the stocks that have substantial exposure to the sector, like Overstock.
Yeah, I mean, I don't trust this company. It had a great run in the boom last year as a proxy for crypto, but crypto's being annihilated. I definitely have been wrong the last 6 months, letting some remaining pieces of my positions ride out in a HODL format, but crypto is it's not even worth talking about. You either took your losses or you're in this thing right now as a believer. I'm continue to follow the VCs that have been, in for a penny, in for a pound, but we're in a show me period for crypto, right? There's not enough usage. It's depressing. No one really understands blockchain, or at least mainstream. And it's people have had 10 years to play with this stuff, and we haven't seen a breakout kind of apps. So Overstock, these are just companies trying to reinvent themselves, and it's not working. And the market is in a show me state. So if you're gonna speculate in this type of bear market for crypto, you better really understand what you're doing, because it's hard to value these companies. So I would say, as much as I believe in crypto, I'm not adding here. Let's go to some ideas that are working. I think in biotech, last week I pulled up Amgen. Yeah, so here's biotech, marking time near highs. Amgen, one of those stocks that just tried to break out a few times. I think you have to watch it right here. There's still risk. People still want risk, and Amgen, is a huge biotech company. Some biotechs are breaking out. There's Nano that Trader Stewie brought up, NANO that I mentioned yesterday on the streams.
Nano is not a biotech, by the way. So it's a
semiconductor, flat panel. Sorry. So, I'll get back to Nano. But on the biotech space, there's the three gens. There's Amgen, there's Seattle Genetics. Yeah, I don't care about Celgene, but SG, yeah, Illumina's done amazing. But I was going to pull up the three gens. This Seattle Genetics, we talked about it here on the show last week, kind of broke out. It's kind of in a drifting upward pattern, and then Myogen. So, which kind of pulled back today. So biotechs, the markets aren't quite ready to bust out, but I wouldn't be surprised if they did, based on the price action. But again, with the quietness of the summer, you really, may be okay to take a little time off and not press your luck here. But I think it's a market of stocks here, Ivan. What are you seeing?
Absolutely, I agree. It's a market of stocks, but looking at the small cap biotechs, I mean, it's not looking really super bullish to me as a chart pattern. Mm-hmm. So it needs more time to set up properly. Definitely, the large caps are looking better than the small caps, which is in general not bullish for the sector. Currently, what's working is in retail and in software. And I mean, last week we saw so many short squeezes. I mean, take for example Tinder, which is owned by
as you know, I'm long, but that's a good reminder. Just everybody thought Facebook. You look at that Facebook announcement, and the stock dropped 25%, and now they're back above that. Facebook, while it has power in the advertising space, if you have a niche network in 2018, and by niche, Match Group is not niche, it owns all of dating, but Tinder, for example, no matter how much Facebook comes for you, you can see that strong networks in niches are hard to disrupt. And so kudos to Match. Okay, keep going.
We might see a potential Facebook impact further down the road, 6 to 12 months ahead. But as of right now, Match.com is reporting incredible numbers. Look at that huge acceleration in earnings growth. And considering that 50% of their really small float is short, it's not such a big surprise that we saw that short squeeze last week, and it might not be over. So as I mentioned, retail has been really, really strong this year. Amazing comeback. So many names have already doubled from their 52-week lows where they were late last year. RH, look at RH, despite today's weakness, up 5%. Another one that last week broke out, really good earnings.
Restoration Hardware, by the way, everybody. I mean, what a comeback. This company was left for dead.
Let's go back a longer term.
There's a favorite of mine, got stopped out in 2016, never came back to it. Now wow, bigger and better than ever. Incredible brand. We're Restoration Hardware customers. I just never came back to the stock. I don't know. There was too many other names, but yeah, like you said, Ivan, you got to keep moving. And look at those numbers, $7 a share estimates. So not cheap, not expensive, just kind of market multiple, but it's not an easy business. And, we're not an easy business and been prone to crashes in the past. So I don't know. I think what you're saying about retail, though, is could keep going in some other names.
Okay, so another one, Boot Barn. I think they sell cowboy boots and hats. Apparently, this market is doing really well. Look at that earnings growth.
Makes sense. Red States, Boot Barn.
700% earnings per share growth, double-digit sales growth.
I've never been in a Boot Barn. I mean, I can imagine you would like Boot Barn.
I like the stock. I've never been in a store. I just care about price action. Here's
a big Tilly's fan. They've obviously benefited from this fashion, this young generation bounce back and kind of differentiating himself with clothing. Tilly's is just a great teen mall brand. I kind of avoid these things, but it's a beautiful setup. Let's go longer term on Tilly's.
Yeah, let me go back to that.
No, that's a really powerful. Yeah,
it's a major breakout. That's a recent all-time high, just above their IPO.
Retail is dead posts. It's just amazing how many retail is dead posts there are. That's a really good catch. Okay, so retail. I mean, listen. The thing that can work on retail is the leverage. Is that these malls need tenants, and these kids are loyal once a brand catches on. The fashionology leaders continue to do great. Here's Nike. Nike had a great weekend. Every golfer was wearing Nike. There's Five Below that Ivan is sharing. Here's Callaway. Wow. So yeah, retail and consumer brands, fashion brands seem to be the rage. Callaway is more, I think, truly about their Dave & Buster's model, the Topgolf model. Oh, what's golf? Kush, that's Titleist. Okay, but hard to not sexy stocks, but definitely strong. So that's I think Acushnet is Titleist, but I could be wrong. And Callaway we showed before. Okay, let's go to the SL50. See if there's anything.
I mean, it's dominated by software and retail. Because, that's what's been working. An interesting name on the list this week. It's a Chinese company, especially considering how weak.
It's kind of their FedEx, ZTO.
Yeah, considering how weak China has been in the past few months, how basically the Chinese internet ETF KWEB is at 52-week lows.
Yeah, it's 30% pullback.
Yeah, it's a substantial pullback in Chinese and many emerging market stocks. So to see that strength in ZTO, in that Chinese name, that's pretty incredible to me. That means that there is a substantial buyer picking up and building a position in this stock if it can hold so well near 52-week highs, while the rest of the country is
yeah, and they're in the right. They're not a shipping company as much as they're a logistics software company, so it's definitely on my list. So that's a good new name, ZTO. Let's go down. So I see that Alarm is back on here. It was on in the past. Let me pull it
back. Big gap up on earnings last week, and it's just consolidating. And even today, it was up. So
it needs to be on your list. So Alarm.com. I got to do some work on this. Internet security solutions for smart home. Okay, buzzwords in an era where Amazon bought Ring. Great domain name. I got to go check out their products, but there's something going on there. This Pluralsight's really interesting too. PS.
Oh, definitely. It's a new IPO, and it's just building a new base. It was up even today. Definitely want to keep an eye on.
Yeah.
I mean, they don't have earnings yet. They're just growing.
Early. Okay, so that's a little early for me. I like 6 months of. So let's go back to the list. I like 6 months of trading. Okay, Grubhub stays up there. Mongo, Square, more all-time highs. So you got some robots, you've got retail, you've got software, you've got continued strength in some select biotechs. Listen, there is risk on. If we looked at Zendesk has been one of my favorites forever. SendGrid is kind of a new leader. If we pull up SendGrid in the email space, it's an interesting breakout. You know, I was lucky enough to be a shareholder early. We've talked about it before. It's still a really early stage. Proof is in, you know, the numbers in 2019. Still an expensive stock, but in an era of communication between companies, intercompany and companies and their customers, the era of MailChimp, etc. SendGrid is a worthy competitor in this space. You know, it doesn't have a lot of brand recognition, but the developer community and companies like StockTwits, we all know who SendGrid is. So it's more B2B. That's been a hot sector. You can see the relative strength is strong. Company's been public long enough that people that really wanted out have had a chance to get out. And you know, the risk is these are not cheap stocks, but it's definitely on my list and showing up in SL50. Okay, let's go back, Ivan. Anything else new?
There are quite a few new names. As you can see, there are quite a few with the letter N, which means a new stock this week. So Take-Two is back. It's a play on esports.
It's a play on esports with a safe bet on their racing. They have the brand. I'm having like a brain fart. Where the gamer racing platform. I forget the brand. Sorry, but you know, you have an esports play with an earnings play. So it's a poor man's esports buzzword. All the gaming stocks have been doing well, but you know, I'm not a gamer, so I kind of missed this trend as a non-product user, and my kids weren't gamers. And you can't, you know, if you can't understand the catalyst yourself, it's very hard to ride out these the volatility in these growth names. And so I've avoided this. But if you really understand esports, you know this brand. I mean, understand gaming. Take-Two's been around for 30 years, so. Not a new idea. And it's just had an incredible run since 2011, 2012. And so a lot of that is brought on by social networks and the fact that kids are connected. A lot of that is brought on by their franchise brands. And a lot of that now is esports and obviously the global nature of the software market. So Take-Two is there. We go back to that Nano that I mentioned before. So there is some, you know, some strength in the semiconductor market. Where if you pull up the semiconductor index, Ivan, yeah, I mean it's quiet right now and in a range, but the leaders, NVIDIA, AMD, and now the Nano, are kicking butt.
Yeah, definitely.
The younger kids know these brands and how to take these computers apart, but I don't know the space well enough to really understand the catalyst full on. But a great breakout like this is a great breakout. It had great earnings. The growth on the earnings is not huge for 2019, but I think the market, there's some smart money betting on momentum here, and that was a big earnings gap.
Well, this is a guess anyway. That's an estimate.
Yeah. But the estimate for growth was not massive. But 2017 to 2018 was massive growth. And you can see the gap back in May, and it's kind of digested that and now broken out again. Okay. So
let's talk about the sector that doesn't work, though, in the US.
Yeah. Well, I think this would be a good way to end it and teach a lesson that eventually trends end. The housing, you know, we've been talking about interest rates rising, obviously off small bases, you know, 0% to 2%. But you can see that, you know, that the housing sector is heavy. And, you know, if you look at this monthly chart like you got here, Ivan, it's just kind of a blip. a sideways blip, and you had this breakout at the beginning of 2018, and basically a full give back. We're back into 2017 numbers, 2016 numbers, and the stocks look terrible. And this is a huge industry. The last crash in 08, it was the home builders that kind of derailed everything with the leverage. So I think you just have to kind of remind yourself that, how are you going to position yourself when things turn? And so the housing stuff has turned, the crypto stuff has turned, but right now there's enough sectors, software, biotech, and select growth and retail that are working really well. So it's kind of a mixed rotational market. What are you reading into the housing? Anything?
I mean, the market strives to be forward-looking, and basically what is it saying is that the current level of real estate prices and the current level of interest rates will impact home builders' earnings in the next 6 to 12 months. So that's why the real estate index and sector is basically at 52-week lows. That doesn't mean that the market will necessarily be right, but it's just a market is making a bet, and we'll see if the numbers will confirm it. That's how all long-term trends happen. The market makes a bet, and then it's just looking for a feedback from the company's earnings to confirm that bet. And if it keeps confirming it, then the trend continues up or down. And if it doesn't, then it ends. I personally think that with rising interest rates, the current real estate prices are not sustainable, but this is a market.
I have a lot of my own personal data from being a tenant and being a landlord and looking at properties. And I don't know, I'm not, and then we look at Zillow. They've really kind of dominated the retail space, and the stock kind of blew up. So they've got to reinvent themselves,
Okay,
obviously.
that's a good point. Yeah, let's take a look at Redfin, which also is trading at all-time lows.
Ooh.
Missing earnings estimates. No, they didn't miss stages. They're not reporting growth. They're not growing anymore.
These sites are porn. Like I look at Zillow, that's a porn site for my wife in the sense that she loves checking prices. They're Yahoo Finance, and she doesn't follow the stock, so she doesn't know if the stock's doing good or bad. But Zillow has announced that they're trying to reinvent their business model a little bit, and so the market does not like that. So there is some pressure in the system, but there's just so much capital, and the reason of the show is to kind of get a feel for where money is flowing, and money is still positively flowing into the market. It's just been more of a market, kind of a market of stocks.
The bulls are still in charge. All slight pullbacks here being welcome as buying opportunities, but once in a while, a 2-3% pullback turns into something deeper.
Yeah, I think if we're going to get this new leg higher, we're going to need. I mean, the student debt stuff is key. There's just a lot. I mean, you have the election in the fall. You've got financials haven't really been super strong. It's kind of been mixed. You have to be in the right ones. You got housing a little bit weak. You have interest rate rising. You have, there isn't a lot to be worried about, but there is enough strength as well. So I think you're just going to have to, be patient here and take the ideas as they come. I don't think it's a great time to do a ton of things. I think you can keep riding your winners. I mean, with Google and Apple at pretty much all-time highs and Amgen near all-time highs, that those are the three names that say there's still money hiding out in big caps. And if that can rotate out back into small caps as we go through this correction, and China doesn't have, real disaster, then we could see an interesting fourth quarter to the upside. But and seasonally, this is kind of a scary period where a lot of institutional money just is looking for a reason to get spooked. If they've had a good year, the fall is where a lot of stuff happens. This Turkey think it was really interesting. So this is a good chart to say there was plenty of warnings here over the last 2 years. And, crashes happen really fast, like you could say it was dead money for a year or two, chopping around in the lower highs, and then boom, it's down 50% in the last 6 months. And that's what crashes can look like. They just slowly develop and then boom. You look back at this chart and you go, wait a minute, there was 10 warnings in the 30s to get out of this stock. And this is a country. So it's not even a stock. This is like a country ETF down 50% in 6 months. So again, the whole GDP of the country is kind of the Netflix size of Netflix. So it's all relative. But again, like these chart patterns, if you study them long enough, there are plenty of warnings. This Turkey looked great in March of 2017, or even this March 2018. There was a breakout in the 40s. And then it just quickly reversed. And so you just have to kind of be careful out there always. So that's a good way to end it, Ivan.
I agree.
See you next week.
Yeah, see you next week.